Investing in the stock market has long been regarded as one of the most effective ways to grow wealth. And while the allure of picking individual stocks can be enticing for investors just starting off, new dividend growth investors often find themselves grappling with the daunting task of selecting the right companies to invest into. Now, this is because single stock picking, like anything else, requires skill and experience to be done properly. So this brings up the popular statement that I hear all the time in the investing community from more of the veteran investors. Many longtime investors think that newer investors are better off buying into high quality ETFs that have a long track record of positive performance compared to single stock picking without any experience. Now, in this video, we are going to explore both of these options, and I'm going to give you my honest opinion on this topic. Me being a dividend growth investor with around 7 or 8 years of experience so far, and well over 7 figures invested throughout the market. Now stay tuned because we're going to go through all this and more, but after you please drop a like in this video and subscribe for more content like this. Now for newer investors, buying into high quality ETFs can be better than single stock picking for a number of reasons. Reason number 1 being diversification. ETFs provide instant diversification by pulling together a basket of different companies from all sorts of sectors. Now, by investing into a single ETF, you can get exposure to a wide range of assets and stocks. And with doing so, you're reducing risk associated with individual stock picking. Diversification can help mitigate the impact of poor performance in a single stock on your overall portfolio. Now, a quick example of a high quality ETF's total performance versus a single stock that I personally bought some shares of when I first started investing, comparing their performance over the last 5 years is very obvious. And not to pick on Altria Group, ticker symbol MO, but as many of you know, Altria is a single stock, a single company that offers a massive starting dividend yield, which does give a lot of newer dividend investors like myself sucked in to buy some shares. But for example, if around 5 or so years ago, I just purchased something like SCHD, which is a very high quality, well-diversified ETF, which we are going to go over later in this video, rather than buying into a single pick name like Altria that does have a massive dividend yield compared to SCHD. Over the past 5 years, SCHD almost returned 7 times as much. Now again, I'm only using Altria as an example because again, for newer dividend investors that don't have all that much experience, and I'm speaking from past experiences and past mistakes from my own investing journey, buying into super high yielding but low performing dividend traps can at times get you into some trouble versus what a newer investor would have found themselves in if they just would have bought into something high quality like SCHD or other ETFs. Now for the dividend growth focused investors out there that might be watching this video, you might not exactly know what a dividend ETF really is. Dividend focused or income ETFs are a type of ETF that specifically targets companies or assets that all have a few things in common. One of them being that they all pay dividends. Now some characteristics and benefits of dividend ETFs are things like a decent starting dividend yield, so investors can start getting paid dividends pretty much right after they buy into the ETFs. Also, dividend ETFs offer dividend growth, which means that they're going to pay more and more in dividends, hopefully long-term into the future, which is going to make your money stretch further and is hopefully going to generate more income long into the future. Now these dividend ETFs also of course offer diversification, which most all ETFs offer, and these dividend paying ETFs oftentimes offer lower volatility because a lot of times the stocks within these dividend focused ETFs, like the one that we're going to go through here in a second, are full of established companies that tend to be stable with less volatility compared to non-dividend paying stocks that might be associated with higher growth but also higher risk. So now that you know what a dividend ETF is and you know sort of how they work, let's go over my favorite dividend growth ETF known as SCHD. So SCHD is a pretty simple ETF, yet it's been very effective as far as performance, historically speaking. The objective of the ETF is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US 100 index. Now this is an index made up of around 100 or so stocks that all have a history of paying dividends, and most of the stocks within this index also have a history of raising their dividends. Now some of the highlights for SCHD. The fund is a low cost, tax efficient ETF, with SCHD's expense ratio being just 0.06%, one of the cheapest ETFs across the entire market, and in my opinion definitely worth the price to have a high quality ETF that tracks a basket of amazing holdings. Now some more highlights about SCHD. There's around 651 million shares outstanding and about 47.2 billion in total net assets. Now SCHD's current trailing 12-month dividend yield is around 3.8%. So this is one of the few ETFs across the entire stock market, which investors can buy into and receive a very nice starting dividend, but also be attached to a high quality ETF with some massive capital appreciation as far as historically speaking. SCHD as far as share price is up 176% as far as all time, and that's just over around 10 or so years. Now, some of SCHD's top holdings are things like Broadcom, Cisco, United Parcel Service, PepsiCo, Coca-Cola, Verizon, Merck, Texas Instruments, Pfizer, and AbbVie. And although if you scroll through and look at all the holdings within the SCHD ETF, what's great about it is that most of these holdings are rather familiar, and you and I have probably heard of most of these stocks within this ETF, which is sometimes rare in the more large diversified ETFs, where in some cases you might not even know most of the holdings within the ETF. So now that we talked about a few of the reasons why ETF investing at an early stage in your investing career might be a better idea than single stock picking, I want to give you all my honest opinion, my honest take on this. If I could go back in time to when I first started dividend investing years and years ago, I personally would much rather buy into a high quality ETF like we talked about in this video, SCHD, or there's plenty of others like VYM, like VU. There's so many great dividend ETFs that do pay a maybe smaller starting dividend. But what I would do if I could go back in time and do it all over again, instead of single picking every single stock like I did back in the day, I would buy into a very high quality dividend ETF, and then in the meantime, I would learn, research, and learn some more. You see, with investing, there's a learning curve like anything else, and at least for me specifically, it took several years to get fully comfortable and to fully understand how the stock market worked, even learning things like how to pick individual stocks and how to analyze them. These are things that you're not necessarily going to understand right from the start. So in the meantime, if a newer investor was to just slowly buy into a high quality, diversified dividend growth ETF, and then on the side of that, practice, research, and learn how the entire stock market works, I think personally, in my opinion, that would have been a much better path for myself, rather than making all the mistakes I made by single stock picking right from the start. But I want to hear what you guys think down below. For newer investors that are interested in dividend growth investing, is it better for them to single stock pick right off the bat, or buy into a high quality dividend growth ETF that has a long track record of performance? And in the meantime, if they do want to do some single stock picking, learn all there is to know about the markets and how everything works. If you enjoyed this video, make sure to please drop a like in the video and subscribe for more content like this in the future. Thanks as always for stopping by, and I'll see you in the next one.